Okay, so we now go to the fringe benefit tax. This is under section 33 of the NIRC. Okay, just remember that this is a tax on employers. Okay, this is not a tax about on employees. It's the tax on employers, 32% gross up monetary value. Now, you memorize paragraph B and C. What's that? Okay, let's go there. Paragraph B, well, how do you define fringe benefit? Okay, and the fringe benefits that are not taxable. But you might be wondering why is this a tax upon the employer? Because previously or before, even after now maybe, there are employers who mask the true salary of the employee. Say the employer earns 30,000 and they break it down into 15,000 for, or maybe 20,000 for the salary, and the 10,000 would be for allowances. So you remember for other benefits, the allowances under section 32B, exclusions from gross income, if it will not reach like 82,000 in any calendar year, then it is excluded from gross income. So in this case, if you're receiving 30,000, okay, you break it down, the employer will break it down at 20,000 for the basic salary and the 10,000 for the allowances. So you have this 20,000 for 1 year, okay, that's 240,000. Then you multiply that at 24, section 24, the schedule there. It would be lesser tax than you declare it as 30,000. And the 10,000, well, maybe that's 10 times 12, that's 120, so the 82, that's the ceiling. So the employer will just pay a lesser tax as compared to declaring it as the whole 30,000. This is a kind of a you circumvent the law here, so that the employer is taxed when they do that. But well, this is there are rules here, especially the employer convenience rule, because it's not always what the law presumes good faith. Okay, if what is this employer convenience rule? An example of that is when you are a marketing guy or a girl, you're a marketing specialist, and for you to efficiently market the product, you need a vehicle, right? You travel a lot. The marketing people are the special species because they provided a lot of perks. So one of these is the vehicle. You can only imagine if you sell products here in Jansan, under the scorching sun, and you smell of your sweat and whatever smell that you have, and nobody will buy products from you. So you have to have your own vehicle. You must look presentable, and you must smell presentable. So this is for the convenience of the employer. Okay, you remember, it's not really for your convenience, but for the convenience of the employer, because the housing, if you live in Coronadal or somewhere else, like 100 kilometers away, and your job is in Benson, and the company, okay, so we will provide you a housing allowance for you, because it would be convenient for us, so you won't get late every now and then. Okay, so that's the idea of the employer convenience rule. The benefit is given to pursue the business of the employer, not subject to fringe benefit tax. And you remember the de minimis benefit, okay? Small value in relation to the business of employer. And of course, the rank and file employees, as provided here, are not, well, the allowance or the benefits received, or the fringe benefit received by rank and file employees, are not included. Okay? Now, this is, well, as we discussed here, this is the employer convenience rule. Okay, because of the peculiar nature and special need of the trade, business, or profession of the employer. Okay, this is the employer convenience rule. What I want to discuss is this case, an interesting case of Honda Cars Philippines versus Honda Cars Technical Specialist Supervision Union. What happened here is that the management and the union agreed under a collective bargaining agreement that a certain benefit should not be taxable. Okay, if I remember it right, this is all about the gasoline allowance of every employee or certain employees. And if the employee cannot use the gasoline allowance in a month, it would be convertible to cash. The, the, the controversy arose when the Honda car started withholding the tax on the converted gasoline allowance. And they went to the NLRC, and the NLRC ruled in favor, I think, of the union because it's under the CBA, and it went up to the Supreme Court. Now there's this procedural aspect on that, but the Supreme Court said taxation is the state's inherent power. Its imposition cannot be subject to the will of the parties. So the management and the union cannot agree or compromise on the taxability of benefits under a collective bargaining agreement. It is the state's inherent power. Only the state can say that it is exempted or it is not. So the rule is taxation, right? You remember that. Now, there is this because the Supreme Court noted that why is it that the NLRC went on to rule about the taxability? You have no power to rule on the taxability of anything because your jurisdiction is all about labor laws. Okay, but we'll go to that later. But this one, the fringe benefit, you remember, this is a tax on employer. And what is this gross up monetary value? We'll discuss that just to piss you off. How do you compute that? Okay, where is this? Well, in the gross up monetary value, here it is, shall be determined by what? Dividing the actual monetary value of the fringe benefit by 68%, starting January 2000. So, if you have 10,000 and you divide it by 68, that would be much higher. You multiply that by 32%. The product is the fringe benefit tax. But it would really be unreasonable if you're asked to compute or etc. But who knows? The idea here is the how do you arrive at the gross up monetary value? So this one, you just remember the actual value of the fringe benefit, you divide it by 68 and you divide it or you multiply that by 32, you arrive at fringe benefit tax. Okay, remember the de minimis benefit from the word minimum. Well, what are those? The housing allowance, the clothing allowance, the rise allowance, makeup allowance, all the allowances. The allowances. And what are those? The employer convenience rule. And Honda Cars Philippines, you remember, you read that. Okay, so that's about it for section 33 on the treatment of fringe benefit. And next we will discuss about section 34, the allowable deductions.